All right, what's going on, everyone? This is Taylor Horton with the nightly video for Tuesday, June 8th. So last time that we spoke, we were taking a look here, all the squeezes across the board. So it's squeeze city right now. The indexes are squeezing, the sectors are squeezing, and of course, the individual stocks are squeezing. No squeeze more important than the squeezes here on the indexes. So the S&P 500 finds itself basically where it was last time we spoke, going absolutely nowhere, but structurally, it's still a bullish daily squeeze. So I'm still of the thought process. Clearly, you got to give the market some time here, but as long as we hold the bullish structure, 1 to 2 weeks, I'm looking for a move into new all-time highs. So as long as we can hold structure, we might have to sit through a little bit more of the back and forth, but I do think we're going to see higher prices. So the squeeze for the Qs, the squeeze for the SPY, the squeeze for the Dow over here, total chop fest, but they have bullish structures. And I do think ultimately the bullish structure takes us into higher prices. So few things I've been focusing on here for Google. Google had the good daily squeeze back over here. So in the options room, this is the go-to setup. So we sold the put credit spread and a nice little push here. Bought back the spread last week for a good 75% of max profit. So pretty good trade there on Google, but I don't think Google is quite done yet. We're not quite in +1, -1, but we're still just not getting that big time release of energy. So with a daily squeeze to the Qs, if the Qs can fire along and they make a push into new all-time highs, I think you're going to see upside for the tech stocks across the board. So Google, I think you're going to get a push here into brand new all-time highs should you get a little nudge from tech. So Google, you get a dip to the 21, I think you can take some consideration to an entry there. Microsoft, which we've been covering for the last few weeks, still looks phenomenal. Got the stacked DMAs, daily squeeze, tried to get through +1 today. It was close. Tried getting out of the noise, but ultimately a little bit of a fade. It still checks out. It's a mirror image of the indexes, and that's the thing right now. There's good-looking charts everywhere. There's good-looking squeezes everywhere, but they're a reflection of the market. They're good structured squeezes that are going absolutely nowhere. And it's just a reflection of the market. The market's going nowhere, and as goes the market goes the individual stocks. So keep in mind, whether we're looking at a Microsoft or a Google or a PLBY, which we'll take a look at here in a second, the chances of that move happening in your favor, those chances go through the roof if the overall market finally can fire its squeeze. But Microsoft, this fits the bill. Stacked EMAs, good clean structure. I think that's a good candidate for a push into new highs if the market can get it going. And then one more tech stock here is Amazon. So I haven't been the biggest fan of Amazon as of late because as the Qs have gotten back on their own 2 feet. Daily chart of the Qs is clean. You got a squeeze. We've been back above the 21. We got the stacked EMAs. You got the positive histogram. The Qs look good, and Google and Facebook and Microsoft look good. It's Apple and Amazon who have been lagging behind. So what I haven't liked about Amazon, we do have a squeeze, so obviously I like that, but we haven't been able to get back above the 21 until today. Today was the first time in over a month you got to close back above the 21. So slowly but surely, I think Amazon looks a little bit better here. What I'm looking for tomorrow, can we hold support back above the 21? Give us 2 solid closes back above the 21. I would love to see the EMAs go back to being stacked positively, but if you dial it down to a 4-hour chart, right on top of that daily 21 in the squeeze, you got a 4-hour squeeze taking place. So slowly but surely, Amazon's trying to regain a little bit of structure. 2 closes back above the 21, stacked EMAs, then I'm open-minded to a position here. I'm thinking big picture, Amazon has this beautiful weekly squeeze. It's been weekly squeezing for almost a year, going on about 10 months now, but I gotta like the structure here. It's a total chop fest, but it's still a bullish structure. Stacked EMAs, histogram goes positive. So Google, Facebook, Microsoft, and now maybe even Amazon, they're all looking pretty good here on the daily charts. Only thing we're waiting on, and are going to continue to wait on, is the index. QQQ fires long, we get a push into all-time highs. There's your window of opportunity to get a move out of Google, get a move out of Microsoft, Facebook, or Amazon. So a few things to watch there in tech, and a few other good-looking setups. So for PLBY, beautiful setup. Really, really good structure. So as soon as I saw this one yesterday, this is the kind of setup I got to get a piece of. You get the big IPO base, Big explosive move out of the base. Here's your first legit pullback to the 21, and now you got a fresh daily squeeze. You got green 10x bars, positively stacked moving averages. At least for the things I like to focus on, this fits the bill here. So let's see. So yesterday, good push through +1, so we sold the -45 strike put credit spread, and now we're going to give this as much time as it needs to potentially fire to the upside. So thinking in terms of probabilities and structure, looking for the squeeze to fire long, looking for a push into just about new all-time highs, right near that 3+ ATR extension. So, good looking structure. I think you give your trades time right now, and I also think, y'all know I'm a huge fan of the credit spreads. This is a market environment where the spreads can be favorable. If we continue to chop back and forth another week, another 2 weeks, holding those calls, it's going to crush you. You're going to get crushed with the premium decay. But a good example of the benefit of selling the premium is look at Caterpillar over here. Good looking daily squeeze goes absolutely nowhere, but because we sold the credit spread and had short strikes at 235, that little grind higher and the passage of time, we're taking that trade-off last week with 75% of max profit. So there will be market environments where the momentum is very much intact, we're very liquid. Then you're looking for quicker moves. But I think based on the price action for the last few weeks, giving your trades time and taking consideration to selling premium versus buying premium, I think that can work to your benefit right now. But continue to keep it simple. The driving force here for the next few weeks is going to be the squeezes in the indexes. If they end up firing long, you want a couple of seeds planted in good looking setups. So I got myself some Google. We picked up some PLBY here yesterday. We picked up a little bit of Costco. All good structures, all setups that fit the bill. We're just waiting on mama market. So for me, that's going to continue to be the focus for the next handful of weeks. We have got squeezes everywhere you look. The big question is, do the squeezes fire long? Do we get a push into all-time highs? Based on the structure, I think that's the next likely move, so that's what I'm looking for. But as always, I wish you the best of luck for the rest of the week. If you haven't already, go on ahead and hit that subscribe button, and we look forward to talking to you in the next nightly video. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me